Hey guys, welcome to VA Friday. So today we're going to be talking about a way that I've gotten VA offers accepted in the past. It's a very specific situation where this can happen. Not so much if it's allowed, but so much if the borrower has or the client has the ability to do this. So we'll get right into it but I got to do a quick dad joke. This one's more of a one-liner, than a dad joke, and it's a gnarly one. So, what is 12-inch long and has been sucked in for a long time? 12 inches long and it has not been sucked on for a long time. Whitney Houston's crack pipe. Whitney Houston's crack pipe. Pew pew. All right, so getting right into it. So one of the ways I've gotten, we've been able to be strategic in getting VA offers accepted is what I like to call kind of a legal bait and switch almost. So this is how this works. I get a buyer who's super qualified, and they've even have a large amount of cash that they've saved up for the last however many years to be put toward buying a house. Like, let's say, for example, they saved up $50,000, and that's how much they saved. That's how much they have to buy a house. That's all the money that they budgeted. Well, in case they are using a VA loan, which is of course a zero down payment program, I tell them, you don't have to spend all that money to buy a house. And like, what if I basically asked them, what if you didn't have to spend all that money? And they're like, even better, we could do other stuff with that. I'm like, great. Luckily, since they're using their VA loan, down payment's not required. So all they really have to do at most is maybe pay their closing costs of about maybe maybe $12,000. I think it was like a $400,000 house at the time. So, but because of the environment of the VA loans in the community, is that VA loans can be tough to get offers accepted. Not so much of the loan itself, or I guess bad narratives around VA loans. Is just that everyone had appraisal concerns. So what I would recommend the client to do is sometimes if you feel like, or you and your buyer's agent, start talking and realize the listing agent has some concerns about appraisal, or you guys might have concerns about appraisal. What I would recommend is maybe taking some of that 50 and putting on the offer a $30,000 down payment out of the 50. Okay, that still leaves them plenty of room to pay closing costs, but they put $30,000 down. What this signals to the seller and the listing agent is that if there's a low appraisal, the buyer has the ability to handle it. Okay, that's what it really means, because that's the biggest concern when it comes to a lot of VA loans these days. However, let's say we order the appraisal comes back and it's a $400,000 house, $30,000 down. The appraisal comes back at $400,000. Guess what? We don't need anymore, because the appraisal is at $400,000. Is that we don't need the down payment anymore. So at that moment, when the appraisal comes in at value at the purchase price, we do an addendum that changes the down payment back to zero. And then therefore the buyer had the ability to get their offer accepted, put themselves in a competitive position. And now they can really, now that the appraisal is good and add value, they can relinquish their requirement to bring in the down payment per the contract. And then they bought the house with maybe just paying their own closing cost. So and again, that really only just applies to clients who have that kind of money saved. A lot of clients, I would say about 70% of VA clients don't have the ability to do that. So if they can't, that's not really an option, but it is an option in case that if the VA client does have a significant amount of cash saved. I'd say around, if they have around 30 to 50, you can do something like that. Another way is something called the 22AD. That's what they call in Washington State, but it's basically the low appraisal addendum. So essentially you're doing something similar, but it's only contingent on how low the appraisal comes in, which means that if you put in an offer that's a little bit higher than purchase price, let's say it's a $400,000 house, but you offer $410,000, you could do what's called a low appraisal addendum, and you would cover if the appraisal comes in low, you put in a condition in there that you would cover the difference up to $410,000. Not so much that you would cover up to $410,000 up to a certain amount of money. So $410,000 up at most $10,000 or something like that. So that's something that is probably a little more effective because it's conditional rather than something that's fully committed. So something to consider when you're looking at trying to make your offers a little more attractive to the seller. And ultimately, it depends on what the seller wants too. So it's, as you guys know, it's compromise and it's a negotiation. So something to consider when you that may be a concern and you have a buyer that has the ability to do that. But I've done that probably a handful of times, coaching clients through that. So, and buyers agents. So if that works out, sometimes it's worked out every single time that a client is able to do that. Otherwise, that's all I got for you guys. Nuke out.